All right, so now we're going to get into what the auditor's doing. And I think it's quite interesting these days. The auditor doesn't actually look at lots, or apparently look at lots. We sit there with our laptops and second screen and we're typing away and we ask for things in PDF and we go and photocopy things or scan them in. We're all tapping away. There could be 3 or 4 of us there, not necessarily on your jobs. And so I'm hoping to demystify a little bit about what's happening. So we enter the realm of receipts where the money actually comes into your world. And these are what I call the elements. I use that word a little bit sometimes. The elements that your receipt must have. Must have the words trust account, name of your business, trust account. The date, who from, what for. Now, if you're running manual records, you've got to have books of 50 and keep the duplicate. If you're having electronic records, you have to be able to achieve a similar happening at the end. You have to be able to reproduce that receipt. So what do? We have a look when we start up looking at receipts. Are the numbers following on from last year? So when I say receipts, I'm talking about whatever EFT system or whatever that you use. Has the number followed on from last year? We have a look at things, looking for unusual items, see if there's anything odd, what we think is odd. Look for gaps in numbering. When we had those printers, dot matrix printers, sometimes receipts always got, or checks got wasted as everybody set them up in the printer ready to go and all that sort of stuff. So you go looking for things that where the gaps are and find out where they've gone. And follow up cancelled receipts. Because just because the duplicate's cancelled doesn't mean the original was cancelled. So if a cancelled receipt's there, the original of the receipt should also be there. It becomes a bit tricky when we're doing electronic. So we look at the number sequence. We've got in our firm, we've got a system where we pick the starting point at random and we do random selections, dollar unit sampling or whatever, just to get an idea of how it's all going. So we look at whether the number of the ones that we've selected, whether they're consecutively numbered again, because we might have in our review not seen the individual ones that are missing from a sequence. And we're looking for the same things, the name of the person who made the payment, whether it's by cash, cheque or EFT, who's it received for, and a brief particulars of what it's about and the amount of the payment. So it's important that if you receive money for 3 or 4 properties, unless they're all being sold as one, that you would create, they might be the same person who's selling them, but there'll be 3 separate transactions involved. You need to have 3 separate ledger accounts for those. So after we've done that, we go and find, we've always got the receipt book, although it just depends on what system we're using. You look in the cash receipt book looking for that number. We follow it through to the trust ledger. We follow it through to the bank statement. Now in some instances, the first transaction is when it's seen on the bank statement and they have to find out what's going on. So generally speaking, I would expect in your businesses you would be expecting money to arrive and you'd be looking for it. But sometimes money arrives unexpectedly. So what do you do with money that arrives unexpectedly? You've got no idea where it's from. Pardon? Contact, yep. You write a receipt. You create a ledger. Yeah, I'm sorry, yeah, you're right. But in the end, anything that goes in has to have a receipt. Now, you may have an account where it goes in and comes out and you record why it all happened, but that's what it is. Anything that goes in must have a receipt. And then we go the other way. We go looking through your client files, the contracts, that sort of thing, and trace everything backwards to see if we can identify anything that's gone wrong that way. So we're looking at it from both ends. And depending on how we've assessed the situation, we might be wanting to know whether there's a bit of a mixing of office and trust monies. We had an interesting situation with a lawyer last year, and it's not exactly the same, but these things can happen with all sorts of businesses, where there was only one FPOS machine. Not one for the trust account and one for the firm account. And so the money all got banked in the firm and then straight across the trust account, which is not the right thing to do. And because this character was a criminal lawyer, it was quite interesting as to where the money came from and where it had to go. And so if you've got FPOS facilities, you should have two separate facilities, one for your firm and one for your trust account. But I would have thought that with you there would be less FPOS, there would be more bank transfer or bank cheques. Yep. The cheque still lives on. So anybody got any questions about receipts? Questions? Issues they've had? Okay. Well, when you have receipts, you must have payments. So it's the same sort of elements that we're looking for. Traditionally, we'd look at the cheque butt and see that all that information is recorded on the cheque butt. Date, how much, who for, which matter, reference to the ledger card. So all those elements need to be there for payments. And most importantly, cheques need to be marked not negotiable. So when we're coming along, same thing, we're looking at consecutive numbering from last year, which is usually happening because the bank produces the numbers. Sometimes you order books out and forget that you've ordered one, you get the next one and the whole sequence is missing and we ask why, what's happened to the other one. And what I didn't mention on the previous slide was that cash payments are not permitted. You can't cash a cheque, everything has to be not negotiable. It's not envisaged that you're able to do cash transactions, which is highly unlikely in a conveyancing transaction. I would have thought the money would be too big, but you run into Cash Transactions Act issues. But you'd have to think of a way around that. That was legal. So we're looking for those sorts of things. So we're looking for pre-number cheques, consecutive order, your name, trust account name, and then we follow up all the cancelled, missing, out of sequence, all that stuff. We're looking for things that might have gone wrong. The reality is life is like that. Things happen out of sequence, things go wrong, innocent explanations. We, in some senses, have to assume the worst, that there could be something wrong.
Excuse me, can I ask a question about the cheques?
Sure.
Because it's good someone asked a question at some point in time, isn't it? Going back to your other part on payments, in terms of writing out of cheques, and you've got had non-negotiable there.
Yep.
Go back and check, I think ours are standard non-negotiable. But what about all bearer? Because I know when I used to work for someone else a long time ago, we used to cross out all bearer.
Mm-hmm.
And we certainly have never been instructed to do so where I work currently.
So as a lawyer, can you explain to the rest of us what or bearer, the implications of that? Because I knew a guy who used to do that. It was actually quite a nasty thing to do. He wrote all cheques or crossed out all bearer.
Yeah. Well, we used to cross out all bearer because it meant that, or in theory, I was told that it meant, and I'm certainly not accountant, never have owned a chequebook in my life, that it meant that anybody could then, because the bearer of that cheque could then cash that cheque in theory, but even if it was made out to, to my expense, or a business name, as most of our cheques would be, I was always told to cross out all bearer because any bearer then could then transact on that cheque.
Well, when I started work, that was actually quite a big thing. But these days, you write a cheque, and I don't think anybody really understands that you possibly, if you really want it to go to the person you intend it to, you need to cross out all bearer, because cheques have a sort of a history like promissory notes, I suppose, in the first place. A piece of paper, if Joe Bloggs has his piece of paper, you are authorised to pay out of my account this money, they can take it out. So it sort of morphed into a cheque, and then the all bearer really comes from that time of those promissory notes. It's a very interesting question. I have to admit that I don't know the answer to that question. But I do know a long time ago I had a friend who always crossed that out and created lots of issues for people who were trying to bank cheques.
Yeah. But then the all bearer part of it, and this is, I guess, where my thinking is about leaving it is then who becomes the person who is then authorised to then bank that cheque.
Yep.
Because in theory, if they're banking it into a bank account, which most of our people that we're writing cheques to, AIC, Palmerston, etc., they would then be banking that straight into a bank account, as opposed to what we used to find. So I used to understand, so we used to have to cross out a bearer on our cheques, because then any old Joe bloke would take them into a shop and then in theory cash that cheque. So lost cheques and all that sort of thing.
Okay, so can we just talk about EFTs? Something I probably omitted to put on the slides. How do you handle your EFTs out? Do you have to? You don't? Not out of the trust account? Does anybody have any out of? Yes? And how do you handle that?
Just reference the file number and the client name.
Yeah. Who signs it?
Has to be signed by
Principal as the principal in my
Right.
office.
You're the principal, so you will click the button.
Authorised by me.
You will click that button though.
Yeah.
You're the only one authorised to click the button as the sole practitioner. Okay. A lot of times on many audits, not just in these sorts of situations we come across, we have all the guarantees right up to the end of the process. We've got somebody authorising the purchase, somebody agreeing that they got the goods, two people agreeing that it should be paid for, and then it's given to the clerical operator to do the EFT. That means the clerical operator can ignore anything prior to that and just put the money wherever they like, in theory. They probably wouldn't, but I'm continually surprised, I shouldn't be because I've seen it so often, that people do not have two authorised signatories for EFTs. Sole practitioners, I can understand, they're completely responsible for what they do. But, so it's a bit like a countersigned cheque sitting in a drawer, same thing, that was, a lot of people used to do it, should never have been done. So when there were two signatories required on a cheque, somebody had signed it and put them in the drawer. Pardon?
In my absence,
There has to be two, yep. And how do you do EFTs in your absence? Two people. Right, that's about the best you can do. Don't have a problem with one because you are the one who's responsible. But you must be thinking about who is actually doing your EFTs as to whether you've got enough controls. Do you have Bank SA here? They allow, on business accounts, one signatory, we'll call it. They do, which is, never understood. So I would always make sure you had two. Because that's an easy way to take your money from A to many Bs, anywhere else. Right, sidetracked. So we're looking for all of those things. Cancelled, missing, out of order, gaps in numbering. So hopefully I'm showing you that we don't just sit there and tap away on the keyboard. Auditing is an interesting thing to do. You sit there, in some ways you're not really thinking a lot about what's going on, but you're actually thinking a lot about what's going on. You're just letting things drift past and saying, well, is that consistent with what I'm seeing elsewhere? And it's just a continual awareness of what's happening. So we take a sample of cheques, computer listings, whatever, and we go to the records and we're looking for evidence of client approval. So No money should move out of a trust account with express approval from a client, purchaser or vendor, whoever it should be in that transaction. No money should move out of an account without permission. And I suppose one thing I haven't talked about there is cleared cheques. You should make sure that funds are clear before you send your money off. I've been thinking about this for weeks, and I'm just thinking about things that are popping up.
In terms of evidence of client approval, what about if the funds are being returned to them?
I think that would be okay. It's common sense. We are in the territory, so I think we can do that here. In the Northern Territory, I think that would be quite fine, as it's quite clear that if the transaction doesn't go through, that's what should happen. But in other jurisdictions, you need permission written. Depends, yeah.
Actually, yeah. Isn't that where big disputes arise, though, because of our legal requirement that you're supposed to have authorisation by both sides?
Yeah, I would.
You don't always get agreement
Yeah.
to the release, even though legally they are.
I think I answered that. I think the answer to that's a very cautious yes.
Yes.
Yes. You should document. So, in our world, we document everything. We document why we're thinking something, how we thought about something, and why we've decided. In your world, you probably should do the same. So there's nothing like a file note about everything that will get you out of a lot of trouble. So in my world, they talk about us being sceptical all the time. How can they know that we were being sceptical? We've written it down. Whether you're right or not is probably not the issue in my world. It's about whether you've actually gone through the process and thought about it. And it'd be much the same in yours. You'll make mistakes, we all make mistakes. But if you have a good reason as to how it happened, why it happened, you've written it out, you've done it this way because. But mistakes you make might take you back to court somewhere where somebody's trying to recover money from you. So professional indemnity is always an important thing. So we've got and we look for clearing of payments. So in your transactions, most payments would be cleared on the day of the settlement or thereabouts, you would hope. And there would have to be a reason why they weren't. Bank checks?
Yeah.
What about them?
In terms of release of funds, probably more so in my perspective.
Yes.
Yeah, where bank checks able to be seen in the account but not cleared yet.
How could you have a bank check not cleared? Oh, I see what you mean. You draw it on a bank check and then the bank check's being held. Isn't that taken care of? Well, I have to say I don't do territory solicitors, but there's the national legislation talks about things other than trust monies that travel through your office that you and I wouldn't call trust monies, client monies that travel through that you are responsible for. They have to be in the direct payments register, that's what it's called. Yeah. Wouldn't that be taken care of in there? Yeah. Gee, you had me thinking there.
Well, I mean, we all do it. We all get funds in for settlement.
Yep.
And, you know, worst case scenario, we ask our clients to do bank checks on the day because sometimes you get down to a line that way. And, you know, we write checks on that basis for settlement in terms of distribution. But I've always wondered whether we were able to do it.
I'm sure anything can be done. Yeah. Any other questions on payments? So the trust ledger is probably one of the most important documents. If the receipt and the payment documentation has been, the trust ledger tells the story of the whole history of the matter. So one thing we do is agree opening balances to the list of balances at the last audit. I don't, luckily these days, do a lot of the legwork, but at the end of last year, even if we've created our report in a Word document, I'll drop it in Excel and make sure that the listing adds up. nothing else has to add up, because we're saying that it agrees to the bank balance. Sometimes people change systems during the year. Sometimes people, for some reason, recreate the ledger and start again, don't bring the balances forward properly. But by definition, 30 June balances at midnight should be 1 minute after midnight the same. Not necessarily the case, so we check for that. Everybody do their reconciliations monthly? Yeah, try to. Weekly if possible, that's probably good. So I would have recommended at least monthly, but I think weekly would be good practice. And with all this online banking, you'd actually almost be wanting to look at it daily to understand that it all was working okay, but you probably wouldn't want to formally reconcile it more than once a week. So we check for separate ledger accounts for each client matter. So I suppose it's a bit like if you were doing a subdivision somewhere and there were 100 blocks being sold, there would be 100 different matters in your ledger, because you'd have 100 different contracts, you'd have 100 different everything else. Very important that now we've got our receipt number, we've got our payments with our EFT or cheque number, that we can see things referencing back to those documents, that they flow in and out. Because this tells you whether you're in balance or not, well, whether you've got enough sufficient funds. So somebody puts 10,000 in, you write $11,000 cheque. Hopefully your electronic system won't let you do that. At least process it, hopefully. But if you're not using a recognised trust account program, it may be possible. And in a manual system, it definitely is possible. It should be updated pretty well daily, because it's a live document. It should be, your staff, you should be able to go to your trust ledger, know that all of yesterday's transactions have been processed and there it is today, so that you can work out where you can go next. Can you settle? Are you able to pay these amounts out? So we look for evidence of it being regularly and properly reconciled. So all the time we're looking for evidence that people have been paying attention to what's going on. So audit's a lot about confidence. So all the time as we're finding these things are working, we get more confidence that things are working. So we check everything backwards and forwards. So we take a sample from the client ledger. Got to have credit balances, got to have client authority, and we've talked about that. And we haven't gone into overdrawn or debit balances. And sometimes it happens. So what do you do when it does happen? Just as a general concept.
I had one that was marginally overdrawn because the bank, despite my written instructions to charge a bank cheque fee not to the trust account but to the other account, did it. And because I only had that one client's money in my account, it went out plus an extra $10 and I was $10 overdrawn. So, I mean, you just have to get the bank to fix it, but in the meantime I just rectified immediately.
Yeah.
And then sorted it out with the bank.
So in my mind, you weren't overdrawn. The bank had incorrectly done something. I'm not sure whether the regulator here thinks that, but sometimes they don't.
Actually, how it works from the other way, we're in very formal agreements with the ADIs, receiving the interest on those trust accounts, and they are required to report to us on any overdrawn account and do so. So it's usually us that finds out first, we then put it to the agent.
Even if it's their fault?
Well, sometimes it can be their fault, yes. But
Quite often is.
Yeah, exactly.
Yeah.
So we just put it to the agent, and we actually then would encourage the agent, if it wasn't the bank's fault, to notify their auditor, so it's transparent.
Okay. So I can ask you another question now that I've got you. Okay, so that happens. Would you expect to see that in my report?
Yes, I would. Yeah.
Okay. So that's why sometimes you get these things in your reports, because it's expected. Okay. not because they want to have a go at you, it's because that's the way the system works. Everybody likes to know what's going on and understand how you've corrected things. So we'll talk about that in a minute.
I suppose the other issue is a trust account should never be in debit. The way you administer it, and often it is they've put out a cheque but they've forgot to do the banking. And that might have been the cause of why it goes.
Yeah, they draw cheques on uncleared funds. They don't take into account that that's a cheque from an obscure institution and it might take a little while to get cleared and all that sort of thing.